Good day traders, this is Stefanos on behalf of Tixee, and in today's webinar we'll be giving a look back of the market for the week of the 17th until the 21st of October. Looking at some of the highlights for the course of the past week, on the stocks front we had several stocks reporting their Q3 earnings figures, some of the most notable ones being Netflix and Tesla. And on the Forex front, it was the UK that actually made headlines with several trade-worthy events. But first, a disclaimer, as always, please note that all of the ideas discussed in this webinar are my own opinions and do not make up for any form of investment, trading advice, neither any recommendations to buy or sell. You should always do your own research and due diligence before buying or selling any securities, financial products or instruments, and whether you use any kind of trading strategies. Any information that relates to past performance is not indicative of future results. So, looking at stocks, first things first, as we said, we're well underway with the Q3 earnings season. And throughout the course of the past week, we had around about 7 stocks releasing their figures, which was the ones listed on Tixee's platform. But the ones that took over the spotlight was Tesla and Netflix. I'm actually going to pull up the chart of Netflix first in front of us, so we can just have a look at the chart at the same time. Now, as for the report itself, now Netflix reported its figures after the market closed on the 18th, which was a Tuesday, and it beat both the EPS and revenue expectations. Now, the earnings per share estimate was actually beaten with a surprise figure of up to 45%, as the estimate was 2.13, with the actual figure coming in at 3.10. Now, as you can see just by the chart itself, this was the day prior to the release. Then we did get the release, and you can see the huge gap up that the price made, which was the reaction to the positive news. Now in terms of percentages, it actually skyrocketed close to 20% in the 3 days following the release. So this was basically the day that the release took place. And we had the 3 days following the release, and we can see that pretty much how much higher prices have moved. On the close here, prices closed at 240, and we're pretty much sitting at 290, close to $300 right now. So we can pretty much see the impact that the earnings report had. Next up, we also had Tesla. Let me just type in the ticker symbol. Now, it wasn't the same story with Tesla and its earnings report, as it had a mixed one, meaning that the EPS estimate was missed, while they did beat the revenue expectations by 2.4%. Now, the mixed report, however, it did weigh quite negatively. As you can see by the chart itself, we actually gapped down instead. Now, the reason being is because investors focused on the fact that Tesla made 22,000 more vehicles than what it actually delivered. So this was basically seen as a sign of weaker demand by investors, and we can see how this reflected on the chart on the very next day, as prices dropped by more than 6% or $13.50. We can see that it did stage somewhat of a comeback on Friday, but it's still a little bit further down than the close that it had 2 days prior. We can see that with the day following the release of the report, the price actually gapped down all the way down to almost $200, but is now back up to 213, but it still has a little bit of ground to cover until it reaches the levels before the earnings report was released. So this is with regards to stock. We're going to have even more stocks releasing their figures next week, so I would say definitely stay tuned for the outlook, as we're going to be covering those stocks as well. Just a slight hint, it's more than 10 stocks that are listed on Tixee's platform. We're going to be all releasing their figures next week. Now moving on to Forex, the main focus over the week probably was reports and news coming out of the UK, as we said during the intro. First of all, we had inflation data, which came out on Tuesday and actually showed an increase of 0.1%. But this essentially means that inflation is still sitting in double-digit territory in the UK, since now it's currently at 10.1%. However, the news that most probably overshadowed even the inflation report was the fact that the newly appointed Prime Minister Liz Truss resigned after just 45 days in office. To date, this is actually the shortest PM tenure in history, But the news over Truss's resignation, they were seen as quite positive. Even if we look at the chart itself, essentially we can see this was the day that Truss announced her resignation, and the pound dollar actually rallied by more than 125 pips, or 1.13% again on the day of the announcement. Now the candlestick itself might not seem as impressive, but as we can see, the pound dollar has been quite volatile over the past couple of weeks, so even a candlestick of this size is pretty much a total of more than 100 pips essentially. Things could remain quite volatile for the UK and the Great British Pound specifically in the following weeks, as they're back into planning who is going to be appointed next. So I'm pretty sure the market is going to be reacting to those news as well, again depending on who gets appointed as the next Prime Minister. We even had reports that former Prime Minister Boris Johnson might run again, so we can totally expect markets to react to those news as well. So I'd say that the pound dollar is definitely going to be one of the pairs that's going to be towards the top of my watch list for the next couple of weeks. And then lastly, we had oil and gold prices. Now, oil prices were mostly unchanged on Friday. They did remain quite range bound, as we can see from the day itself. Like, you can barely see even the body of the candlestick. The reason being is because we have two narratives basically fighting one another. On one hand, we have OPEC, which, if you remember a couple of weeks ago, they cut the production. I think it was by 150,000 barrels per day. But this was obviously offset because the US responded and they came in and said they'd be increasing their supplies from the US Strategic Petroleum Reserve. And oil prices have since basically eased 8% from the highs, as we can see that they were up here. We're trading up, I'd say in the mid-90s, we're down in the mid-80s now. So yeah, the fact that we had OPEC saying it was around about the 5th of October, again it was like beginning of October, where they mentioned they'd be cutting production quotas by 2 million barrels per day. Then the US came in and countered the move by adding another 15 million barrels per day. So we have these sort of two narratives which are essentially fighting one another, and hence why we can see that markets have been somewhat range bound for the past, let's say, month more or less. This is when we started getting the reports of the OPEC that it'd be cutting the production, hence you had this candlestick right here, and that's when the US came and responded with adding even more barrels into the supplies, and that's when we started seeing prices dropping from these levels up here. So obviously, I think one could expect that this is going to continue for the foreseeable future. We do have Russia coming into play as well, which could also be influencing the output of oil as well on a daily basis. So we're going to see how oil prices are going to react to that. But nevertheless, we can see since the start of the year, prices have fallen quite dramatically. Obviously, I'd say not as much as the equities markets have fallen, but we can see that even oil prices have felt the brunt from the strengthening US dollar. But yeah, there you have it as far as the look back and review for this week. Again, a reminder, I'd say definitely stay tuned for the outlook, because we're going to have so many stocks are going to be releasing their figures for the Q3 and Q4 earnings season next week. So it's definitely going to be an interesting week. And with that said, I hope you enjoyed the video and you found it useful, and I'll catch you in the next one. Till then, trade safe.